It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, August 18th, 2015. Cruising our way through the week here. Another exceptional day today. Got rollover on crude. S&P coming off the highs. Euro coming off the highs. Gold coming off the highs. If you followed our notes from last night's newsletter, right on track with everything here tonight. Before we dig into those charts, though, we get another jam-packed newsletter in store for you. And all brand new levels for trading opportunities on crude, because we did roll over on crude here. I want to remind you guys, everything we talk about tonight in the video, I cover it to all of our students here at School of Trade. We have beginner, intermediate, and advanced levels of membership, and you can grab a free trial on our website at schooloftrade.com. Also, want to remind you to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube page right now, there's a link in the description of the YouTube video that'll take you right over to the blog. A couple of reasons why. First of all, you can grab a free pass, come out and test drive our live trade room as a guest. If you're not a member of School of Trade and you want a free pass for our trade room, upper left-hand corner. Second thing here, you can register for our nightly newsletter mailing list right above my ugly mug. All I need is your name and your email address, and I'll send you an email every evening just before 8 p.m. Eastern Time when this newsletter goes live. That way you never have to worry about missing another newsletter. Right in the middle here, there's a link to download all of the charts you're going to see me using in tonight's video. All the charts you see me using in tonight's video, you can download all those, have them on your computer for tomorrow's trading session. And of course, on the right-hand side, you can join our free trial membership. You can get more information. You can read member reviews, and you can always, of course, speak to somebody 24/7, 365. We're always standing by to help you guys out, answer all your questions. Are we ready to rock and roll? I hope you are. Stay hydrated out there. Put your helmet on for this one. It's going to be another great newsletter. Moving our way through here, this third week of the 8th month of the year. We got rollover on crude, but we're not there quite yet. Let's talk about the S&P E-mini. The E-mini S&P, if you will. S&P's bearish after breaking the highs of the wedge and trading range, which means sellers will be looking for trades at resistance levels above and buyer failures at support. Nothing new here on the S&P right now. We are seeing our plan play out perfectly. As I said in last night's video newsletter, there was a line right here in last night's newsletter. And of course, we know we have the wedge. And the wedge really is the most important clue. Right now, we have a wedge here on the S&P. And again, I think the wedge is the most important clue. Keyword here is rotation. Rotation. Right now, we're going to rotate from low to high, high to low, and ultimately, we've got all these resistance areas above. Very, very simple. One of my favorite ways to trade is with these types of consolidating price wedge, triangle-bound markets we're seeing right now in the S&P. There's really no directional bias to it. It's pretty much just fade it as it comes out. So as it goes up, I'm looking for, there were 3 opportunities we talked about last night. What were those 3? Yeah, one was a reversal. Reversal pattern will be one of them. We teach that in our intermediate course. And remember, the target on this is going to be coming right back to that high, right? That'll be one target. And then, of course, another target will be back down at that low, right? So that'll be another target there. Yeah, and you'll see that'll be on the chart here as well. So first opportunity is going to be reversal pattern. Okay, there's one. Second opportunity is going to be wait for the buyers to try and fail. Second opportunity, buyer failure, right? Look for the buyers to try to buy that high, sell into their stop losses. Where's my targets? Yeah, same spot, right? Same spot. What's my third opportunity here? What's the third strategy for selling these highs? The third strategy is stay patient, wait for it to start making its move, and then wave patterns, continuation patterns on the way back down. Targets? Same targets, right? Top of the channel, top of the wedge, bottom of the wedge. And if we happen to slip and fall all the way through, you've got levels of support on the opposite side, right? So this is a really easy, did I say easy? Easy strategy to follow. And as you're seeing right now, that's exactly what we're looking at right now. We go up, test that prior range high, buyer failure, and we're coming right back down in. We also talked about a trading range last night in last night's newsletter, if you recall. Went into quite a lot of detail about this one. If you remember, we had a little bit of conflicting worlds colliding here right now, right? This trading range had a bullish bias to it, which meant you're going to get some buying opportunities down at these lows, but you couldn't get too greedy on it because as it pushed up at this high, this is a very suspicious breakout pullback, right? Some bear traps down here at these lows. You never want to sell the lows, right? You didn't need me to tell you that, right? You've been watching this newsletter long enough. So we go up to the high. Now you want to think about both these scenarios. I want to sell the high. So what I'm going to do is I'm going to be waiting here tomorrow morning for, you guessed it, price jumps up, breaks out. If and when this fails, bringing it right back down in. Buyer failure at support. We talked about that last night. As we go lower, I'm looking for 3 opportunities to sell at resistance. Reversals, buyer failures, and of course, wait for it and then sell the rip. If it just keeps going lower, which now it is going lower, it's buyer failure at support, buyer failure at support, buyer failure at support on the way down. And then, of course, as we start to retrace off that, what's likely to happen is we're likely to bounce off that trend line, right? This top of the wedge, okay? That'll be my short-term target tomorrow. We're likely to bounce off that, go higher, and most likely give us another shot at it after the bounce. So keep an eye on that tomorrow as well. Definitely want to be a seller right now. The only way I can even think about being a buyer would be at this stage in the game, all the way down. And it would either be at the range low, which is extremely aggressive. That's a little suicidal for your trade account. I'd want to be buying down at these lows down here. Okay. Now, if we happen to hold and make a new high, then we have a different story, and we'll cover that tomorrow in tomorrow night's newsletter, because that's probably where we'll be right about then. But we know, though, as we go lower, buyer failure at support levels for selling opportunities on the S&P. And again, if we do happen to go higher here, I am going to continue to sell these resistance areas overhead. We start thinking about this becoming a bullish market on the pullback after it breaks to new highs now. So we definitely have a lot more to go before this becomes a bullish market. No matter how bullish it looks in the short term, we have to play this as a trading range, as a price wedge. Don't forget, we'll be trading the S&P tomorrow morning in our live trade room. Come out and join us in real time. We'll be trading it together. How about some crude? Let's grab some crude here. On the rollover alert, we've now moved to the 10-15 contract on crude. Kind of a funny situation today. We saw rollover midday today. Pop quiz. When was the last time that happened? It was before I became a trader. I'll tell you that much. This does not happen very often, boys and girls, and that really goes to show you how worried the producers of crude oil in this world really are right now. It's either that or there are a bunch of gamblers out there right now, because last week we saw signs of the volume shifting last week. This is unheard of. Okay? Then, of course, today we come in, we got more volume in the 9:15. We started, so we traded the 9:15 today. But then by the middle of the morning, it's like 9:45, 10 o'clock, and what happens? 10:15 volume takes over. Unheard of. It's craziness. This never happens. Usually we're going to get rollover at the beginning or the end of the day, right? Not going to happen midday. So why is that? Well, remember, the reason why futures markets were created in the first place was not for speculation, guys. It was for hedging purposes. It allows somebody who is, for example, a producer of crude oil who's worried about falling prices in the future, right? If you're a producer of crude oil, if you're pumping it out of the ground or refining it or whatever, if your business is susceptible to falling prices of crude oil, what are you going to do to offset that risk? You're going to sell crude oil futures. That way you can lose money in your cash business and make money in your futures trading, but your hedging business, right? That's where, of course, hedging corporations come, and that's where a lot of traders do business in the crude oil futures market, right? They're hedging. They're hedging their bet 1 month at a time, trying to protect their bottom line. So when we saw that price or that market's volume shift midday And again, go back to last week. We started seeing low volume and moving to the 10-15 last week, a week ahead of a rollover. It just, if you're new to this, this won't matter to you. But if you've been doing this for a while, this is like, it's like seeing Halley's Comet, which, I'm sorry. I think that only happens every once in a while. But this is really rare. Let's put it that way. Very, very rare. And it really underscores, I got to Google search Halley's Comet. I'm sure somebody will tell me that I'm wrong about that. But doesn't happen often when we rolled halfway through. So it definitely tells you we got something, we got some shenanigans. I wouldn't, maybe not shenanigans, but there's definitely some concern about lower prices out there in the future. It's definitely not a concern about higher prices. I'm going to guess it's concern over lower prices. So bottom line here, we are on the 10-15 contract, and if you got a little bit fooled by that today, you join the club. It was a little bit oddball today. Very rare we see rollover midday. We were talking about that today in our chat room, saying that just I can't even think of a time I've ever seen it happen. So rollover 10-15, as you can see, here's our 10-15 contract, and you'll notice what happened to 40. We jumped up a couple notches, right? So we moved up from the 41s up now to 42s, pushing to 43s right now. Because remember, the next month into the future will always be priced higher, right? You're going to pay for that convenience to hedge. So same plan, different front month. Same plan, different front month. Bearish market, just a little bearish. Got that long-term bear channel on here. That's pretty easy to see. Long-term bear channel tells me sell, 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 sell. Where am I selling? Am I selling the lows, selling the middle, selling the highs, selling the highs? Sell at a premium, sell at a premium. As we go higher, selling resistance. As we go higher, selling resistance. As we go higher, selling resistance. Okay, so we know the plan right now on crude oil. The one thing that you got to be worried about if you're going to be a seller is if we end up down near these lows, right? Don't be selling those lows. Don't sell the cheaper prices. Sell the higher prices. Okay, so our plan for tomorrow is very, very easy. You can see a couple components. Bear channel, and then we have this trading range. That trading range is really important. Okay, it gives us a great spot overhead. 44, 49. That will definitely be where the juiciest selling opportunities will come. Okay, so even if we push up to 44.5, don't start drinking that bull Kool-Aid, right? I bet it tastes nasty, right? Bottom line though is that we have 44, 49 waiting for us overhead. I'm not even gonna blink at bullishness until we really push through 45. Right, I mean, we've really got to be doing some damage above 45 before we even start thinking about a bunch of bulls controlling this market. So, as the price goes higher, as the price goes sideways, as the price goes lower. First of all, as it goes higher, sell at the highs, sell at resistance. You can see I've given you plenty of resistance areas overhead. Any of these levels listed above. You've got a measured move, extension resistance, you've got trigger zones, and then again, you know the granddaddy of all the resistance is going to be up there at 44, 49, we'll say 44.5, just to put a cherry on top. Okay? As the price goes sideways, if the price goes sideways, we'll definitely be looking for a short-term trading range, and we'll be fading all breakouts. Inside my free trial, I teach about breakouts. Inside of our intermediate course, I teach about breakouts. Inside of our advanced course, we teach you how to trade those breakouts with our breakout strategy. See how clever I am? See it right there? Yep. So, if we see a short-term trading range, I got to have some fun with you guys here. Short-term trading range, can you guess what we'll do? Sell the highs, right? Going sideways, find the short-term range, going sideways, fade all those breaks. As we go lower, wave patterns down to 42, 41.94. That's where the selling stops. That's where the selling stops. And guys, I'm sorry, but at the lows, like I said earlier, don't sell those lows. So what's a seller going to do? Stay patient. If you can't stay patient during the times when you shouldn't be trading, find a new hobby. Go to Vegas. It's a lot less expensive to lose money in Vegas than it is in the financial markets. Okay, well, I guess it depends on what your definition of going to Vegas has to be. But we know for the fact, though, as price goes lower, buyers, okay, this is where you're going to get a shot. Remember, though, and I say this every night, what's the strategy if you're going to buy in a bearish trend? Wait for support levels at oversold territory at the lows and seller failure. You've got to get some sort of something to help push that price higher. I would recommend seller failures at support levels and buy into those stop losses. Extension support, seller failure, buy. Measured move support, seller failure, buy. Remember, if you plan on buying at the lows, every time you buy, it's going to be treated as a scalp until proven otherwise. That means a quick first target, tighten up that stop loss, and try to hold as much of it as you can. I think this trading range is probably going to be in play here for a while now, right, as we go into this next month of the 10-15 in the month of August. So keep an eye on that range. Sell those highs, buy those lows. You know where the high percentage trades are going to be. Remember, I can't predict the future, but I can focus on taking only the high probability trades. That's what we do here at School of Trade. I'm going to teach you how to do it right along with me. Up next on the Euro, moving forward here, Euro is looking like a champ here this evening. My favorite market right now. Thank you, Euro. Coming right off the high. Again, like I said at the beginning of the video tonight, this is exactly what we had anticipated last week, and now it's starting to all play out into fruition. If you don't believe me, go back a few nights, look at last Thursday, look at yesterday evening. If you want to, at the end of this video, it'll loop right into the last video I did, right? That way you're not bombarded with advertisements at the end. So, of course, you can just keep on watching this video, and you'll go back and you'll watch last night's newsletter where you hear me say, keep selling this Euro for two major reasons. One, we have the long-term bear channel. We talked about that last night, right? Long-term bear channel. Where are we? We're up off the highs of that long-term bear channel. We're going to try to come back and retest those lows, right? Remember what I said last night? Sellers are gunning for that 0815. Sellers are gunning for that 0815. Next up, we have a bull channel. Short-term bull channel. This short-term bull channel is a little bit tricky. It's making you think this is a bullish market. Even if you do think it's a bullish market, we see an overshoot of that bull channel high, right? Apparently the bulls here have been sipping on their own Kool-Aid too much. They blew over the highs with an overshoot. What does that mean? Buyers are all in. They got to take profit now to get back in. Price will come back and rotate. So we're expecting the sellers to take this off those highs down to that channel low. Like I said last night, either way you slice it, you've got to be a seller right now. Measured move was filled down to the support. Target reached at 1021. That was the same target from last night's newsletter. And really the most important thing is, look where we are. This is exactly what we talked about last Thursday when we found ourselves all the way up here in the nosebleed seats. We said, all right, wait for the buyers to try again. If they fail, it's going back to where? Sorry about that. Wrong button. It's going back to the high of that bear channel. That's where we are right now. Now, follow the bouncing ball. We're back at the high of the bear channel. We're at extension support. Even more so, now we have another short-term bear channel, and look where we are, down at the low. Sellers, take some profit here. I'll definitely encourage you to leave a little bit on the table, but take the majority of your profit right now, because what's likely to happen next is we're likely to see this price come up off these lows into resistance overhead and then give us the next push through. So what am I going to be looking for? Short-term buying opportunities are much lower percentage than the long-term selling opportunities. Smart traders right now are going to be waiting for price to get back up around these highs. Look for, again, what were those three options again? Reversal pattern, buyer failure pattern, or wait for it to make the turn and then sell it back down. Sellers, you guys got to stay patient right now. Now, there is a chance here that we collapse. It's a small chance, but there's a chance we collapse. If we do go lower here, you want to make sure, though, that you wait for buyers to try and fail. You've got to sell into buyer failure if you're going to keep selling these lows. Remember, if you sell here, it's extremely aggressive. It's overall very low probability. So you're not going to make a lot of money doing that, selling the lows. Just like if you sold your home at the lowest possible price, sold your car at the lowest possible price, sold your euro currency at the lowest possible price, you're going to lose money on it. You may not lose money the first time, but you do it every day, and you're going to lose money over the long run. So, euro is bearish, coming off the range highs, but we're trading at some very important support levels. Extension support, bear channel high support, bear channel low support. There are two bear channels in this chart. We're at the lows of the short term, the highs of the long term. That means we're expecting a bounce. Again, if you want to be a buyer, what I'd be waiting, because you're bearish right now, if you want to be a buyer, what do? I just talked about it on the crude. What are you going to do if you want to buy in a bearish trend? Buy into who? Seller failure, right? Wait for those poor sellers to try to sell these lows. It's low probability. And then buy into those stop losses. I'll be looking for, again, it's going to be aggressive buying opportunities, but you want to do that at seller failure. There will probably be some short-term resistance areas in here tomorrow as well. That'll be other opportunities for you. We'll find those tomorrow together in the trade room tomorrow. But there'll be some short-term resistance areas in there where you could also look for seller failure on the way back higher. If and when we get into this area here at the top, though, that's when you start looking for that next leg down, for that next batch of really tasty selling opportunities here on the euro. We get the plan for you, euro. We get the plan on that. And then same thing here on the gold. Wrapping up here tonight with the GC, the gold futures, still on that 12-15 contract. We're going to be there for a while here on gold. Gold is bearish, coming off the overshoot at the channel highs, which means sellers are looking for opportunities at resistance levels as well as buyer failures at support. This is almost identical to the euro, and it's no surprise. Gold and euro are both dominated by the US dollar, right? Negative correlation. Strong dollar, weak gold, weak euro, vice versa. So we know gold and euro are pretty similar as far as the overall strategy goes. As you can see, the chart looks very similar as well. Although, I gotta say, man, gold fell out of the ugly tree and hit every branch on the way down. This thing it's disgusting. The price action is really gross right now. It's very herky-jerky. It's got great volume, then no volume. I got to say, this is my least favorite market right now is gold, and it has a lot to do with the fact of what's happening in Europe, what's happening in China, right? They're playing Geppetto with all the interest rates right now. And, of course, I'll talk about the interest rate hike in the U.S., which is not going to happen this year. It's going to be 2016, probably March. I'm going to guess June 2016, if not September next year, right? They got to get their acts together around the world here. Same plan here on the gold. Same plan on the gold. As the price goes up, I'm selling it back down. As the price goes lower, seller failure into aggressive buying opportunities. As the price goes lower, buyer failure to sell, buyer failure to sell. But look at all this stuff down here. You got just a ton of support areas waiting for you. So if you're a seller right now on gold, stay away from the lows, stay up near the highs. And I'm telling you, it's sloppy out there on gold right now, so I would stay patient for buyer failures at those highs. Really, really pin those buyers down to sell off those highs. You're going to have to really work hard to stay patient on gold right now. It's real sloppy. I almost called this a megaphone, which just really emphasizes just how slippery this thing has been right now. But it's not a megaphone. You got to look at it a little bit differently. It's actually a bear channel coming off that high. So really same thing. It's the same strategy for the euro and gold right now. Sell the highs, and of course, stay off these support areas down below if you want to be a seller. Take your profit at support, sell at resistance as we can try to break free of this little cluster here on gold. Guys and gals, we'll be trading all these markets live in real time tomorrow with all of our students in the chat room, in the trade room. Don't forget, come out and join us here at School of Trade. trade room opens up tomorrow morning at 8 a.m. Eastern Time. Grab a free trial on our website, schooltrade.com. And, of course, we got 3 levels of membership: beginner, intermediate, and advanced. And always someone standing by 24/7, 365 to answer you guys' questions. My name is Joseph. Thanks so much for stopping by again. Shall we do it again? If I don't see you tomorrow morning at 8 a.m. for our trade room, I'll see you tomorrow evening, 8 p.m. Eastern Time on our nightly newsletter. Be well out there. Be nice to each other. And be here in the mañana. Adios, amigos. Bye-bye for now.